And we're back with day 4 on forecasting, making finance fun for entrepreneurs. Welcome back. I hope you've tracked with me here this week. If you haven't, go back on my site or go back on the YouTube, go back on my page on Facebook, which is Pam Pryor, or go back onto YouTube and look at the last 4 of these videos. But what we're doing here is talking about how we can help ourselves with not getting a big tax bill surprise at the end for 2017 by the time we get to April 15th. And one of the things that is a huge help here is the ability to do a forecast in our business. Now, this is a word that often scares people off because they think it's complicated and hard. In large businesses, trust me, we make it complicated and hard, sometimes a lot more complicated and harder than it needs to be. But that's because there's tons of data all over the place and the complexity has just grown for that company. But this can be something that every single entrepreneur, whether you're still working out of a shoebox or whether you've got QuickBooks or you're keeping track of things in Excel or you haven't kept track of anything at all this year, this is something you can really do without too much pain. And the thing I'll tell you is that one way or another, even when businesses get large, the CEOs, the business owners are still doing this exercise in their heads. So let's do a quick recap here. What we're trying to do is get a forecast of what you think your 2017 year is going to look like. So we've started by focusing on revenue. The first exercise I gave you a couple days ago was to go just find out how much you've collected so far from your customers from January through September of 2017. Yesterday, I told you to think about what might impact your next 3 months of you personally having an impact on the business. So a lot of times people take some time off over the holidays. So if you're going to take a week or 2 weeks or 4 weeks off during the holidays, or maybe shut down entirely for the holidays, we need to keep that in mind when we're doing your forecast. Today, I want to talk about 2 other things that you can use to think about when you're thinking about your forecast. And then tomorrow, I'll do a recap of this whole revenue piece, and you'll see how easy it really is. The only reason it's taking a lot of videos is I want to make it bite-sized chunks so that I don't make you tune out. So far, if you followed along, we have a business, and we found out how much it made through September because we checked PayPal and saw how much cash we've collected. And then we said, okay, if we've collected $90,000 through September, I got 3 months left. So on average, I collect $10,000 a month. So boom, 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 I'll collect $10,000 for the next 3 months, and I'll make $120,000 in revenue this year. Then we talked a little bit about, hey, you know what? I think I'm going to take half of November off and half of December off. So let's just assume I'm only going to make $5,000 each in November and December. So instead of $120,000 this year, my revenue is going to be $110,000. The only exercise I'm going to ask you to do today, very, very easy one, is to think about your customers. Actually, I'm going to ask for 2. I'm kind of cheating. I'm going to have you do 2 things today. But the first is think about your customers. And if your customer base is the kind of customer base that either buys more of your stuff during the holidays or takes off during the holidays and may not buy your stuff, you want to think about that as well. That could be another thing that either increases or decreases your October, November, and December revenue from what you were making in September. Okay, so just think about that. And then the third thing is, if you're a startup, okay, so this is mostly for anybody who's a startup or anybody who's grown really fast this year. Okay, so if you started out the year and you were only making $1,000 a month and you ended the year and you were making $40,000 a month, then this average of 10 isn't going to make a whole lot of sense, right? So if that's you, just make a note of that and think about the fact that your next 3 months might not just be $10,000 a month. They might be more than that because you're actually making more recently than you were at the beginning of the year. So that's it. 2 things this week, or 2 things today, this week. This week I'm giving you a lot of assignments. But today, all you got to do is think about 2 things. What happens with your clients when they get towards the end of the year, and what if you're a fast-growing business or if you're really just a startup entrepreneur and things were 0 or very low at the beginning of the year and they got higher during the year, you may want to use a different number than that 10,000 as you're thinking about the next 3 months. And that's it. When we go through all those pieces, we have forecasted revenue for the year. In the case of our company so far, it's at $110,000. Tomorrow we'll do a wrap-up on this, and we will have forecast our revenue. And I think what at the very most should have taken an hour for you, no matter what condition your books are in. And the really important thing here is the thing I want to drive home is this isn't an accounting exercise. This is a business owner exercise. Every business owner should be doing this. Every business owner that's my client is doing this. And 99% of the people who call me to become a client are doing this. It has to happen. So don't voice this one off as an accounting problem or a bookkeeping problem. You really want to have a feel for how your business is going to perform for the year. So forecasting is every CEO's responsibility, and it gives you so much more security as you go month by month and year by year. There is a ton I have not talked about in value that you will get from this exercise, but we'll cover it in time. It's covered in the book. I cover it in my podcast, Cash Flow. So ride with me here on this, folks. This is really worth it. This is the part that makes finance fun, because when you start to know this information and know how easy it is for you to get it, and yeah, when you get to be a bigger company, you'll have a staff that can do that for you. But for now, the pieces that you need to get are pretty easy to get. So let's go ahead and work through this and get you a forecast for this year. So Pam Pryor here, signing off with Finance is Fun. Take care. See you tomorrow.